All right, so this is Workday on the daily, weekly, and monthly chart. I don't even remember when I drew out these lines, these horizontal bands. So we're going to reconstruct the chart again together. But before we do that, I do want to look at this article. It is coming from Market Beat. 3 reasons Workday stock is setting up for a new rally. So Workday specializes in enterprise cloud applications for finance and human resources. It counts more than 10,000 organizations of all sizes as customers for its SaaS offerings. Workday embedded AI and machine learning into the core of its platform, which improves efficiencies for customers and drives faster, data-driven decision making. So on August 25th, after the company announced better than expected quarterly results, the stock climbed 5.5% on the day. However, for the 1 month return, it's up 4%. 3 month return is up 21%. Year to date is up 42%. So getting into the numbers, Wall Street expects Workday to earn $5.57 a share this year, which would be its fiscal 2024 year. That would be a healthy increase of 53%. Next year, that's seen rising by another 18% to $6.56 per share. Strong earnings estimates a vital for stock as they indicate to investors and analysts sentiment regarding the company's potential profitability and financial health. So earnings, check off. Workday has already shown that it can bring the goods. Its 3-year earnings growth rate is 18%, and its 3-year revenue growth rate is 18% as well. Earnings growth accelerated in the past 2 quarters, also a good sign. Maybe due to their embedded AI machine learning tools into their platform. That occurred as revenue growth decelerated ever so slightly from 20% to 16%, but the increase on the bottom line shows the company is operating efficiently and managing costs. All right, let's get into the margins. Workday's gross profit margin over the past 5 years is 72%. Now, gross margin is crucial because it reflects a company's efficiency in managing the cost of what it produces. In Workday's case, that's the cost of developing, marketing, and selling its software. A higher margin indicates good cost control as well as pricing power over industrial rivals. The company raised its fiscal 2024 non-GAAP operating margin guidance to 23.5%. The non-GAAP format is an accounting method that can provide a clearer picture of a company's operational performance by excluding any non-recurring or unusual items from financial statements. All right, so from a fundamental standpoint, Workday checks off the box. Now, what about technically? All right, so no surprise, Workday has rallied with the broader market since the October lows, but specifically Workday, these 2 extended range, really 3 extended range red candles, to me indicate that there were only a few levels where there were sellers, meaning as price rebounded, it was smooth sailing to the upside until you hit these speed bumps. All right, so 2 things before we go down to smaller time frames. I did mark this level off at 225. That was a previous resistance level. Have some support here. So that was going to be a strong level to get through. And as you can see, price did breach it, but closed right at the level. And then in July, price pulled back before closing above it. And even in August, price pulled back to that level again before moving higher. All right, so now let's look at these 2 bands here. I guess it's worth also noting I have this 250 level in green. I guess that was a target, as you have resistance and then this candle's high. All right. So what's the weekly chart telling us? So you see this cluster of wicks, selling wicks. Back in November, once price closed above the level, it served as support now. You also had the dynamic support of these weekly simple moving averages to support further the confluence of this band here, serving now as support. You also had a little area here, right? Resistance, support, support, support. All right, so a couple things about this band here. Support, had a breakthrough, call it a flip zone. Drop in price, basic candle drop, you can call that a seller's level. Rightfully so, when price returned to the level, pulled back, broke through, pulled back, support now, right, which was previous resistance. You also have this little area here as well. Resistance, support, support, support. Now for the week, price is up $7, $8. However, price is entering an area where you have a cluster of wicks, selling wicks in particular, which is probably why I had this target at 250. Not to say price can't move higher, but price is at least going to stall, potentially pull back. Now let me just scroll out to the monthly chart one more time. As price has been in a nice uptrend, respecting this monthly trend line up. You did have breaches, but never did you have closes. Now let's go down to the daily chart. You have this cluster here, and now you have price breaking out. And the breakout formed a daily buyers level at 236. But it wasn't on high volume. So ideally what I'd like to see is price breaking this 250 level, then pulling back to the daily buyers level, and then shooting up. That would be ideal. That would increase the probability of this level working out. But the structure looks great. Had a rallying price, a basic candle rally out, takes out the pivot high to the left. You know, that's a potential setup. Becomes a setup if price breaches the 250 level first. You breach the 250 level, next target is going to be, say, 275. As that was the origin of the drop, which took out the pivot low to the left. But fundamentally and technically, Workday has everything working for itself. Let's see how the next couple of weeks and months transpire. We need to clear this 250 level in order for price to move higher. Thanks for watching. Subscribe. Please like the video.